if I'm a sales manager or used truck manager at a truck dealership, and I'm looking at this like you told me to, Whitnell, what's a number that I need to kind of have in my mind that starts to get my attention? And in my opinion, about 17,000 units, when there's US Class 8 retail sales of about 17,000 units, that combined with all the other sources of used trucks creates a condition where really supply and demand are at about equilibrium. So inventory levels shouldn't go up too much. Pricing shouldn't be, it should be relatively stable and static. Okay. Right now it's stable, static, and strong, right? We're seeing some really strong prices out there in the market. Okay. So, but my point is, for the rest of 2022, I don't expect to see massive corrections or changes.
Welcome to Stream, a trucktractortrailer.com production. My name is Zach Miller. I'm your host, and I'm really excited about today's show. Some of you might remember we did a video a couple of weeks ago about if used truck prices are starting to stabilize, just based on what we were seeing at trucktractortrailer.com and in the marketplace. Well, we finally have an expert on truck prices with us today. I'm so honored to be joined by John Whitnell to talk about this huge issue, this global issue, but certainly an issue here of huge importance in the States. John, welcome. Thank you so much for joining us today.
Hey, happy to be part of it. Thanks, Zach.
Absolutely. And, let's talk, it's part of this is a basic, economics issue of supply and demand. We know the demand is sky high right now, based, in part on the supply. So I guess to lead off, why is it so important for dealers to keep their eye on used truck supply?
Yeah, well, actually, that's a great question. And just to kind of clarify from my position, Zach, demand, as we sit here and speak on this podcast today, demand is actually remarkably stable, and it has been over time. I've been in this business for 40 years, and whether you're talking about the market in general or whether you're talking about specific sectors within the total used truck market, demand tends to be very, very stable. So where you get caught in this business is if you're not paying attention to supply and what's happening on the supply side. And virtually every market correction that we've experienced, Zach, the last 40 years has been from oversupply. And oversupply, your early warning indicator is how many trucks are being built this year, okay? But there's a lot of different ways to look at supply. So I'm just going to submit here for purposes of this podcast today that, if you're keeping an eye on supply, you have an opportunity to identify oversupply conditions before they become fatal. And as you're probably aware, corrections in the used truck business are actually the #1 reason that truck dealerships have defaulted over the last 40 years. And it goes back to, it goes back in before the 2000s. So this is a truism. You can really get hurt, and this risk that's out there today, there's fewer dealers. So the risk hasn't changed, but the concentration of that risk in dealer groups has changed. It's greater today than it's ever been before. If you could get hurt 30 years ago and you're still standing, you could even get hurt worse today. There's been consolidation in the dealer organizations, and there's been consolidations in the fleets, right? So the guys that are buying trucks, they're trading more trucks than they've ever traded before. So, it's just really, really important as a dealer to have your thumb on the scale when you're trying to figure out what's happened to supply.
So, and I am glad you touched on the consolidation, because we've been seeing crazy consolidations for years now. I think end of 2021, 2022, it's just, every day you hear of either a fleet or a dealer or some other group consolidating. But let's go back to the used truck supply a little bit. So when you say used truck supply, give me a sense of what you mean.
Well, absolutely. Look, used truck supply is an aggregation of a lot of different things. Trade-ins or used truck supply comes from a lot of different sources in the universe. And you kind of have to keep track of all those, because on any given day, one of them could throw you for a loop. But certainly the most important place where used trucks come from, where used trucks start, is with trade-ins on new truck purchases. And you could make your assumption. Not every Class 8 retail delivery has a trade-in associated with it. Sometimes fleets are growing, so they don't trade in as many. Sometimes they like to hang on to some for their own owner operator fleets. There's a lot of reasons, and sometimes the used truck market's so good the fleet doesn't want to trade them; they want to sell them themselves. Okay, but certainly the first and the most important factor that you need to be thinking about when you think about supply, and the numbers reported every month in all the trade periodicals, and it's U.S. Class 8 retail sales, and that's the number one thing you need to keep your eye on. But a lot of dealers that are in the used truck business, they have customers that have trade-ins. So what we call trade on trades in the industry. Repossession activity is really critical. It's not so critical today. Actually, we just had a pretty good sized repossession here early spring when Central Freight Lines went down, right? And Central Freight Lines was large enough that could have been disruptive. But the fact is that fleet was mostly, day cab tractors and medium duty inventory. So it was highly desirable. And so it wouldn't cause any disruption. But, you go back to 2018 when Celadon went down, okay, that created a big disruption within the industry in both 2018 2019 as they liquidated that fleet. So repossessions are another source. Zach, one of the things that we saw in 2020 that we really hadn't seen before, but it had a really significant impact on supply, was what the major leasing companies were doing with their daily rental fleets, right? Daily rental fleet utilization rates went through the roof in 2020. And so all the major leasing companies and many of the regional leasing companies were taking units out of used truck inventory and putting them back in their daily rental fleet. And that, when used truck supply was already starting to get kind of tight, people that were used to calling Ryder and Penske for trades, all of a sudden, when they're calling Ryder and Penske, those trucks had all been taken out of their used truck inventory and put back in rental service. So that's a really important factor. And then, like I say, fleet liquidation activities, when they're changing operations, all of these things, when you take them and you add them together and you put it in your martini sifter, it comes out and it looks like used truck supply. It's a pretty complex process, and quite frankly, most dealers and most guys that are listening in on this conference call today, hey, they don't have time, right? They got enough other things occupying their time every day. But if you're a dealer and you can only look at one thing, you need to be looking at Transport Topics, and you need to be looking every month for the charts on Class 8 retail sales. That would be what you could do to serve your own interests the best. The best surrogate for what supply looks like is Class 8 retail sales.
So let's take that a step further though, right? So I'm a used truck manager at a dealership. So how can I use the new truck sales data that you mentioned that's reported every month to determine, what I should be concerned about, maybe oversupply conditions developing? What advice would you have for that position?
Well, so that's again, and nothing in this industry, we always look for these rules of thumb, right?
Yeah.
Hang your hat on, and you can always count on those. And I'm actually going to give you one of those to try and answer your question here at the end. But the first thing that I'd say is, and Zach, we've got a slide on Class 8 retail sales over the last 5 years. Is there any way we could display that slide?
Yes. We'll have it in the
great
in the what's it called, in the link, so that someone could click in on it and go over the presentation.
Going to make a couple of points because it's really a simple slide, but the slide sort of says a couple of things. The first thing it does is over the last 5 years, it tracks Class 8 retail sales. Okay. And you don't have to be a statistician when you look at that, Clark, to say there's a lot of variability and there's a lot of ups and there's a lot of downs. But for instance, last month for March 2022, the reported retail sales were 21,400 units. And there's different guys that report it and they have a little different. So, take that 21.4 with a grain of salt, but it was a pretty big number. And when you look at the slide, when you go back and look at the links, you'll see a couple of things. That 21,400 compares to like 15,000 in the month of February and 15,000 in the month of June. So, you know, you didn't have to get an A+ in your statistics class to say, hey, 21,400 is a hell of a lot more than 15,000. And is this something that I need to start to get concerned about? And, you know, because Zach, this whole industry that we're in right now, and it's been talked about in the press a lot, but it's really all the result of the supply chain dynamics that are going out there in the marketplace. You know, Class 8 orders have been fabulous for the last couple of months. They've been sort of murky because, you know, people aren't going to order trucks if you're, as an OEM, not prepared to give a firm commitment when they're going to see those trucks. Okay. And most OEMs order boards are out well over a year right now. So, you know, that's really having an impact on order receipt rates. But if you looked at order receipt rates before some of this murkiness started to surface, what you'd see is, you know, there's a lot of pent up demand and what OEMs call their order backlog. Okay. And so when you compare this 15,000, 21,400 that we evidenced in March, you might say, well, gosh, these guys have an order board, a pent up order board. They could be delivering 25,000 units a month or more. So the first thing I'd say about the 21,400 is it's a big number compared to 15, obviously, but it's not so big compared to 25 or 26. And if we could figure out a way to wrestle our way through all this supply chain nonsense, not nonsense, dynamics, if we could figure out a way to work through all that, the supply of trucks coming into the used truck market would be much higher. But for right now, we're sort of stuck. And you can, when you look at that chart, you'll see, you know, there's a forecast line for what we think Class 8 retail receipts will be for the year. And my message to this audience is, you know, it seems like progress on the supply chain is slow. Everybody's making a little progress, but as you make a little progress, hey, what's happening over in Ukraine, that impacts what we're trying to do here. So it's one step forward, one step back. And then you take another step forward and there's a lockdown in China and it becomes a one step back. Okay. So we're in the middle of a slog where OEMs are working really hard to try and increase their throughput capacity and their production. And I think they'll have some success as we go through 2022, but there aren't going to be any breakthroughs. So this 21,400, that was a big number. You'll see there's some seasonality on that chart. I don't look for that to repeat itself anytime soon, but all that is to say, if I'm a sales manager or used truck manager at a truck dealership, and I'm looking at this like you told me to, Whitnell, what's a number that I need to kind of have in my mind that starts to get my attention? And in my opinion, about 17,000 units, when there's US Class 8 retail sales of about 17,000 units. That combined with all the other sources of used trucks creates a condition where really supply and demand are at about equilibrium. So inventory levels shouldn't go up too much. Pricing should be relatively stable and static. Okay. Right now it's stable, static, and strong, right? We're seeing some really strong prices out there in the market. Okay. So, but my point is for the rest of 2022, I don't expect to see massive corrections or changes. I see OEMs working really hard to try and get throughput up. And I see us being somewhere plus or minus that 17,000 almost every month in the second and third quarter, and then rising a little bit more in the fourth quarter. So in my opinion, 17,000, that's a number that I've got in my mind if I'm a sales manager at a dealership that I'm going to really start paying attention to. And when I see something like 21,400, I'm going to start asking myself the question, is this a trend or was this just a good month? In this case, March, really good month. I don't think it's going to continue that way. And you can relax for a little bit, but 17,000 is the number I'd be sort of locked in on.
That's fascinating. So your position is that you do expect there to be a dramatic increase in used truck supply in the short term here, you know, I guess the second half of 2022.
Yeah, my position is I do not look for a dramatic increase. I don't think any of the OEMs are going to have a breakthrough in production that would drive this 21.4 to 25 or 26,000 a month every month. But the potential exists for it to be there because they have got orders in place. And if they could just get the pieces to build the trucks, and the right people to stand on the production line at the right point so that they could put the alternator on when the truck's going by. If they could, they've got orders for supply to be significantly higher than it is today, but I don't think they're going to be able to get their supply chains or their productive capacity aligned to deliver in that 25 or 6,000 range.
So then how do you see the supply of used trucks shaking out for the balance of 2022?
Yeah, so I actually see it gravitating somewhere between 17,000 and 21,000 units a month for the rest of the year. So what that means is supply will be slightly greater than demand.
Mm-hmm.
And what that means is we'll see inventory levels start to drift higher in the second and third quarter. And then in the fourth quarter, Zach, I look for things to pick up a little bit. I look for some more improvements in production. So that 17 to 21 could be more like 22 or 23,000 in the fourth quarter. And we'll see the supply start to increase a little bit more in the fourth quarter.
You know, it's interesting. And some of the fleets that we deal with who do have those pre-orders in, who have a couple of pre-orders in,
yes,
have pretty much said the same thing to us. Like they're pretty much on that. They're looking at like around October time frame. But I'm wondering now if, you know, because we're seeing some people who do need used supply, who don't have those pre-orders in, but they're seeing the prices start to fall a little bit. But I think, you know, this conversation, I think should start to get them to think a little bit differently, that if they see a good deal for an asset they need, they probably should take it. The market is not going to be changing too much from now until the rest of 22, as you say, barring some miracle of production, which is unlikely.
You know, so there isn't any good. Last year at this time in 2021, we were going through these meteoric price increases that defied anything I've ever seen in my 40 years in this business. Okay, it was fabulous, but unfortunately that created its own set of complexity and dynamics, because you thought you had some trades coming in from this guy, and all of a sudden he wants more money because he knows what's going on too. Okay, so you know, be careful what you wish for. I think the notion there, but I think the risk, you know, my prediction, my forecast for the balance of 22 is for prices to be reasonably stable, perhaps coming down. We're used to seeing prices come down every month, right? OEMs call it rollout. So if your value of a model year of a truck is $6,000, and if you divide $6,000 by 12 months in a year, in a normal world where everything's in balance and supply and demand are equal to each other, you should see a truck come down about $500 a month. That's normal in the real world, and that's what we would expect to see. And I think we'll start to see that again in the balance of 2022. We'll see prices come down in a normal and orderly fashion, but prices will, year-over-year prices are very high. You know, they're elevated. So, you know, when we go back and look at the year-end prices at the end of 2022 and compare them to 2021, we will have seen a price decline as we went through 2022. But year-over-year pricing will still be very strong, and we're still in a really good spot as an industry.
Yeah, I appreciate that. I think that articulates very well, I think, what I have tried and failed to say to people looking to buy inventory. But so, you know, I think that's a fair assessment where we stand to close out 2022. But what about 2023? What do you see on the horizon in 2023?
You set me up really nicely, and I just want to go back though, and it's really an important point for this podcast.
Yes, yeah, absolutely.
The table is set for bad things that could happen in 2022 if the orders are in place, the order backlog is there. And OEMs make their money by building trucks and shipping them to the dealers so they can deliver. So there's a strong incentive for these guys to fix this stuff and get these orders converted into production so that they can ring the cash register. The risk is high, but I just don't think that it's going to come to fruition in the balance of 2022. So you know, for 2023, look, I'm an old guy, okay, and I'm a finance guy by my education, and so I have a conservative bend to me, okay, but I'm going to say for 2023, I think the party's over. Heard a number of people describe scenarios, hey, a lot of our customers got kind of boxed out in 2022, but they'll be back in 2023. And my position on that is, yeah, there may be some truth in that, but you know what? Demand isn't going to save us. It's never saved us in the past, and it's not going to save us this time. Demand in 2023, regardless of who's buying those trucks, will probably be pretty consistent with historical standards. So, I expect what that means is I expect to see about 150,000 used line haul tractors acquired in 2023. Line haul tractors are day cabs plus sleepers, right? Mm-hmm. You got the vocational side where you got heavy haul and you got your vocational trucks on the class side. That's usually about 50,000 units a year. And then you got your class 5 through 7 mid-range LFE offerings, and that's somewhere between 50 and 60,000 units a year. And I think that's what we'll see for demand in 2023. It'll be pretty consistent with what we've experienced in 2020, 2021, and 2022. So in this pandemic environment, demand has remained remarkably stable. I don't look for a big shift in that in 2023. So I think what's going to be different about 2023 is we'll finally see some significant improvements in throughput capacity of the OEMs, and the supply function will change in 2023. We've had one thing, Zach, working in our favors, and that's the fact that used truck inventory levels in 2020, the decline started in 2020, and it bottomed out about October of 2021. Mm-hmm. So, there was so much room for stock inventory to come into the used truck inventory without adversely impacting prices. In 2022, we've seen inventory levels go back up. From a historical perspective, they're still very low, but some of the wiggle room that we might have had when 2023 supply begins to increase we worked through some of that in 2022 as inventory levels went up. So I don't necessarily expect to see pricing tension in the first quarter of 2023. I expect to see some pretty significant downward price pressures start to manifest itself in the second quarter of 2023. And by the third and fourth quarter of 2023, we could see prices that look like 2018, perhaps even 2019.
That's fascinating. But I think that's one of the salient points is like, we're still talking about a year away from the quote unquote normal prices coming back. And I do think that people really need to be cognizant of this notion that, the OEMs are able to flip the switch and the supply is going to come roaring back here in 2022, in Q3 2022. It's just not the case. It's pie in the sky. And if, you need to operate a fleet, you need equipment, you need to be aware of this. And I respect you wanting prices to get back to that, 2018, 2019 level, but can you afford to wait a year, for it to get there? I mean, I think this is why this podcast is important. That's why your presentation is important. And I certainly hope that people click on the link and review the presentation because, this is trucking and this is your business, and you need to be aware of what the next year looks like. It's not just quarter to quarter. It's year over year.
We'll look back on 2020 and 2021 and really the first part of 2020. Those will be the good old days. We haven't seen that since 2013, 2014, and the first half of 2015. In the second half of 2015, nobody was, the champagne corks were not going off. So, and my sense is that it'll be what, when I say, when you go back and you look at 2018 pricing, hey, there was a supply chain disruption in 2018 as well. Mm-hmm. So 2018 was okay pricing. If you compare it to 2020 or 2021, you're going to get your bucket off underneath your desk. It's not going to excite you very much. But 2018 prices looked real good compared to 2016, 2017, and then compared to 2019 as well. So the party is over, I think, in terms of the pricing that we've been able to see. But, Zach, the other really important point here, as long as you manage your inventory so that you're buying and selling in the same 90-day window, it really doesn't matter if prices are going up or if prices are going down. If you're managing your assets and managing your inventory, managing your investment strategy to protect yourself from the downside risk when prices are going down, Again, that's how you go out of business. You let your customer walk you down a plank, and they talk you into these great big numbers, and before you know it, the bottom is falling out of the used truck market. You haven't left yourself an out in your deal, and you haven't got a way to get out from taking these trades at inflated numbers that could be catastrophic. Okay, so my point is just this: if you're buying and selling in the same 90 days for your stock inventory or to fill holes in your inventory, you shouldn't get hurt too bad. You should be buying trucks that you know what you're going to have to do to recondition, get it frontline ready, and get it sold. And but it's these investments in fleet trades where you can really get hurt. And so, my advice to all of my clients is, as we get through 2022, you need to be thoughtful and careful about having mechanisms in your deals with your customers so that you can have an escape hatch if that's what it comes down to. Because prices will come down by the end of 2020. They'll be lower at the end of 2022 than they were at the end of 2021, and they'll be lower still again in 2023.
Perfect. Speaking of your clients, somebody wanted to get in touch with you, utilize your services. How would they go about doing that?
Look, my email address is jwhitnell, jwwhitnell@aol.com. That'd probably be the best way.
Perfect. And just a programming note, John is going to be coming back on stream a couple more times. We have this whole series planned about the market and pricing. So this was installment 1. And John, thank you so much for your time today. And we're looking forward to the next couple of installments here.
Just happy to be part of it. Thanks for having me, Zach. Be good.
Awesome. You guys like the content you see, please subscribe, and we'll see you next time on stream.